Okay, just a moment. Can you tell me last class what we did? Anyone?
When we are done with the first question.
Okay, thank you. First question done. Fine. Okay, take page number 9 and start writing. We will be doing the second one. Average profit method, the same method, but this question will be different. Some additional adjustment will be there which will be different from the previous one. A and B are partners sharing profit equally. There are two partners in a partnership firm. Profit and losses, whatever happens in the business, both of them share equally. Means what is the ratio? 1:1. 1:1 is the ratio. They agree to admit C for equal partners. So who is C? He is a new partner. A and B, both of them, they agreed, and C is going to join their firm. For this purpose, goodwill is to be valued at 150% of average annual profit of the last 5 years. So we already learned that there should be some reason. Whenever reconstitution of the firm takes place, then only we calculate goodwill. And this is also one of the reason whenever any new partner joins the firm, goodwill is valued. So now C is going to get admitted into the new business, into the firm. That is the reason we are going to calculate goodwill. And what the question says, 150% of average annual profit of the last 5 years. Last 5 years profit are given in our question. So for that, what is the percentage? 150% of average annual profit we have to calculate. Okay. If you see 31st March 2015, it is positive. Positive means profit 40,000. 2016 60,000, 2017 1 lakh. All these are profits. What about 2018? Loss. Whenever in this type of question in bracket any amount is given, you have to understand it is a loss. Okay, so 20,000 is not profit, it is loss. It means when you calculate average profit, you have to subtract this loss. You should not add this loss. Loss should always be subtracted. Kindly write it down. If you get confused, as important note, whenever loss is given any of the year, we have to subtract. Write it down. After subtracting only you have to calculate average profit. Means 4 years profit you will add 40,000 plus 60,000 plus 1 lakh plus 1 lakh 50,000. Whatever the total amount comes, from there you have to subtract 20,000. Then that is the total profit of the last 5 years. Then when you divide by 5, you get the average profit. Is it clear? Anyone is having any doubt so far?
No.
Yeah. Okay, fine. Now additional information. All these are extremely important question, dear. During the year ended 31st March 2016. So whenever you read, just see during the year ended 31st March 2016, where it falls. This. That is the second year, because first year begins 2015, second year 2016. So 60,000 is the profit for that year. An asset of the original cost of rupees 2 lakh with book value of rupees 1 lakh 50,000 was sold for rupees 1 lakh 24,000. Now what is the meaning of these? See, you have to understand the language of the question. So 31st March 2016, there was an asset in the business. Now what is the cost? Cost means cost price. For how much the company or the partnership firm purchased that asset. Cost price. That is 2 lakh rupees. Okay. With book value of rupees 1 lakh 50,000 means on that day, that is on 31st March 2016, the book value was 1 lakh 50,000. What is the meaning of book value? When we say book value means, as you all know, whenever a company purchases any asset, from the date it has purchased that asset till the date the asset is going to be sold, company charges depreciation on that particular asset. Depreciation means loss in the value of the asset, and every year that depreciation is subtracted from the original cost of the asset. So whenever we subtract depreciation from the cost price, kindly write it down. Whenever you subtract the depreciation amount from the cost price of any asset, then whatever amount comes, that is known as book value in accounts. So when we say book value means, you have to understand that asset value of the asset is after subtracting depreciation, because many students don't know the meaning of book value. Book value means total amount of depreciation on a particular asset has been subtracted. Suppose I purchased an asset for 2 lakh, okay, 2 years back. Now after 2 years I am saying now the book value of the asset is 1,50,000, means where that 50,000 has gone, it is the amount of depreciation. I subtracted the depreciation from 2 lakh, then I got 1,50,000. I hope the book value concept is clear. Yes?
Yes, ma'am.
Okay. Okay. Now what they are saying, so 30, all these information are talking about 31st March 2016. So on 31st March 2016, that asset was sold for 1,24,000. How you will understand? Very easy. For how much amount the asset was purchased? 2 lakh. And after depreciation, because book value is given means already depreciation subtracted. So 50,000 was depreciation. If you subtract 50,000 from 2 lakh, you will get 1,50,000. Now the value of the asset is 1,50,000 after subtracting depreciation. Now this asset is sold for 1,24,000 in the market. Means what? If any asset values for 1,50,000 and suppose now it is sold for 1,24,000, means the asset is sold for loss. Till here any doubt? Pavitra, Swarnika, Sachin, any doubt you people are having?
No, ma'am.
Yeah. Sachin, what happened here? Your exams are over.
Yes, ma'am. I still have one more exam left.
Okay. Once the exams are over, kindly go through the previous recorded videos, dear. Okay?
Sure, ma'am.
Yeah. Fine. Okay, dear. So now we are moving to the second additional information. On 1st April 2017. Whenever you read the date in this type of question, immediately move and see 1st April 2017 where it will fall. It will not fall on 2017 this 1 lakh. No. Why? Just imagine. If they are saying that 1st April 2017 means where it will end. It will end on 31st March 2018. So obviously 31st March 2018 means before that. So before that means which year? Yes, anyone can tell this 1st April 2017 where it will fall?
From the year where 20,000 loss occurred.
Yes, yes, exactly. Very good. Any doubt till here, dear?
No, ma'am.
Yeah, that is why. 1st April 2017 means I told the year will end on 31st March 2018. So you have to see 31st March 2018 what is profit or loss. Very good, Sachin. Okay, fine.
Thank you, ma'am.
Yeah. Now, 2 computers costing rupees 1 lakh were purchased. Always remember, whenever they are talking like land and building, furniture, fixtures, or plant and machinery, or computers, all these are assets for the company. These are not the goods. These are the assets. So they are talking about assets. 2 computers costing 1 lakh were purchased. 2 computers they purchased during this year 2018. Okay. And what is the cost price? 1 lakh. Now what they are saying? and were wrongly debited to traveling expenses. Listen again, there is a very important concept. Whenever any business, whether partnership, company, sole proprietorship, whenever any business purchases any asset, it should always be debited to asset account. Now, why it should be debited to asset account? Because assets are capital expenditure. Profit and loss account, whatever we debit the expenses in PL account debit side, all those are revenue expenditure. Now I will explain a quick revision. I will tell you all these are the concept related to class 11th. So see, revenue expenditure means company or the business spends expenses, for example like salary paid to employee, rent paid to landlord, or wages paid to workers. All these expenses are called revenue expenditure. Now why these are known as revenue? Once you receive, suppose once the employees work for the company 1 month, then immediately after completing the 1 month, end of the month, company will pay them salary. Now for the amount for which the company paid, they rendered their services, finished. Now again, if the company wants the service from the employees, the next month again company needs to pay. So these expenses happens frequently in business, and the benefit received by spending these expenses are for short term. For example, within 1 year only, whenever suppose you can take the workers, you have to pay them on daily basis or weekly basis. So these, and you will receive the service for short term. The benefit which you receive by paying them wages will be for short term only, maybe weekly or maybe days wise or hour wise. Again you have to, if you want the service, service means what, you want to get the benefit from them, again you have to make the payment. So those expenses of the business which gives benefit for short term and which is recurring in nature, again and again, every month you are going to pay salary, frequently you are going to pay rent to the landlord, wages to the workers, insurance premium, every month you are going to pay. All these comes under revenue expenditure. The benefit we get is under short term, and also all these are debited in the PL account. Now we will come to the concept of capital expenditure. Suppose business purchase any assets, for example plant and machinery. Now first of all, the investment will be huge. Always remember, whenever any asset is purchased, investment will be huge. Plant and machinery 5 lakh, 2 lakh, 3 lakh it may cost for the business. Now what about the benefit? Every month business is not going to purchase the machinery. Every month computer business will not purchase. Every month furniture, sofa business will not purchase. Once it has purchased, then the benefit which the business will get by purchasing these assets will be for long term. More than 1 year, maybe 2 year, 3 year, 4 year, 5 year, why 20 years? If a machinery like suppose 10 lakh or 20 lakh company has spent for a machinery for carrying out the production, the machinery may work for 10 years also. So more than 1 year. Anything which gives benefit for more than 1 year, that is only capital expenditure asset. Are you understanding the difference between capital expenditure and revenue expenditure?
Yes, ma'am.
Okay, it's very important concept here. So now we never debit these expenses in PL account. Suppose I am purchasing a machinery for 1 lakh. I will not show in the debit side of PL account. Why? First thing, it is a huge investment. Suppose I am showing in the debit side of my PL account, what will happen? I may earn profit only 80,000, 80,000, and I have spent for 1 lakh for purchasing that asset. Then entire year, it will show that loss, I am suffering from loss 20,000. This is not the true. If I have spent 1 lakh rupees on this machinery, it will give me benefit for more than 10 years, maybe 15, 20 years. So what I will do? I will never show this in my debit side of PL. I will show in the balance sheet asset side as my asset, which will give me benefit for more than 1 year. Now what about the expenses which I incurred? Anyways, it is an expenditure, whether revenue or capital I have spent. Now what I will do? Just I will estimate the life. Suppose I think that this machinery may work or give me benefit for 10 years. So how much I have spent? For example, 1 lakh. So I will divide by 10. So every year slowly I will show that expenses and I will remove from my book slowly. Like 10,000 for 10 years, every year I will show 10,000 as my what expenses. In the name of that, depreciation I will show. Okay, in this way I will just reduce. Are you understanding?
Yes, ma'am.
Yeah, so that's the reason. So here why I am explaining all this, because you should know the difference between capital and revenue, then only you can be able to solve this question. Now the accountant who has prepared this account, what mistake he did, what he should have done, whatever asset company purchases, he should show in the asset side of the balance sheet, and whatever depreciation we charge on that asset, that amount of depreciation only we should show in the debit side of PL account. That is loss, or you can say as expense, small amount depreciation. Now, but what he did, this entire 1 lakh he has shown in the debit side of PL account, which is wrong, because it is a capital expenditure. We never show capital expenditure in the debit side of PL account. Kindly write all these concepts in your own words. Kindly write it down. We only show the revenue expenditure in our PL account debit side. So now how to rectify, how to just rectify this mistake? Now what he did, the accountant, he wrote 2 traveling expenses. Like profit and loss account, in the debit side we record all the expenses, all the losses. What the accountant did, he wrote 2 traveling expenses and he wrote 1 lakh rupees, which is wrong. Now you have to rectify. Okay, now just think about the impact. If any expense which should not at all come in the debit side of PL account, I am showing it in the debit side of PL account, what impact it will have in my profit? Unnecessarily my profit will get reduced. This is not the expense, this is capital expenditure, which I will show slowly in name of depreciation for like many years, and I have to show this entire 1 lakh rupees in the asset side of balance sheet. So by doing this, what has happened? Profit has reduced. Now you have to rectify. Now depreciation on computer was to be charged at the rate of 20% per annum. Suppose the accountant, he is treating this purchase of asset as revenue expenditure, he will never charge depreciation, because depreciation is always charged on fixed assets, not on revenue expenditure. And accountant is showing this 1 lakh rupee as traveling expenses, so he must have not charged depreciation. Again, one more mistake. So 2 mistakes we have to rectify, and we have to calculate the correct profit on written down value method. And in class 11th you all must have studied, there are 2 methods for charging depreciation. One is straight line method, another one is written down value method. Now what is this straight line method? Very easy. Suppose 10% depreciation should be charged on straight line. How you will do? Suppose value of the asset is 1 lakh, that is cost price of the asset. Now what we are going to do, if the company is charging depreciation by using straight line method, directly on cost price every year we have to charge depreciation. 10% on 1 lakh, how much? 10,000. Next year also 10,000. Third year, fourth year, fifth year, till the life of the asset is there, we have to charge 10,000 only depreciation, and we have to subtract that from value of the asset. Suppose it is written down value method like in our question, then what you will do? Suppose 1 lakh value of the asset and suppose 10% written down value method. So first year on cost price you will charge. How much? 10% of 1 lakh, 10,000. That comes the depreciation. You have to subtract from the cost price of the asset 1 lakh minus 10,000. Next year value of the asset will be 90,000. Next year you will charge depreciation on 90,000, 10%, 9,000. Then you have to subtract 9,000 from 90,000. Third year in that 81,000, I think 81,000 you have to again charge depreciation. I hope it's clear. Yes?
Yes, ma'am.
Yeah. Sachin, are you understanding, dear? That two methods I especially said for you only.
Yes, ma'am.
Okay, fine. Now we are moving to this. Now what is the formula? Just a moment. Can you hear me?
Yes, ma'am.
Yeah, just a moment. Okay, fine. So goodwill equals to average profit multiplied by 1.5. Now how this 1.5 came? 150% they said, 150 divided by 100. When you do, you get 1.5. That's it. They are saying that 150% of average profit. So average profit multiplied by 1.5. Now you write full form. Don't use like this AP and all. Teacher will definitely cut your marks. You should always use the full form in accounts. Don't use that short form and all. Write fully. So average profit equals to. Now we have to first calculate the average profit. For calculating average profit, first you have to prepare the adjustment table. Okay. So how you are going to prepare adjustment table? As you all know, first you write particulars. Then how many years? From 2015 to 2019. 5 years given, right? 15, 16, 17, 18, 19. Put the columns properly. Write it down clearly. Then first year profit or loss in question. Profit is given 40,000. You have to read whether any adjustment is given. No. Adjustment means in additional information anything is given related to 2015. Nothing given. So write as it is. So there will be no change of profit in 2015. Profit will remain same, 40,000 only. What about 2016? 60,000, it is the profit given, but in 2016 what has happened? 31st March, an asset, as I told, the cost price of the asset 2 lakh and book value 1,50,000 means depreciation, that 50,000 they have charged already. It was sold for loss. Okay, it was sold for loss. So this 26,000 loss on sale of asset, 100% we would have shown in the debit side of PL account. Now this is abnormal loss. As we know, any abnormal loss or abnormal gain, we have to do the adjustment. This is abnormal loss. So this will unnecessarily reduce the profit of the business because we want normal profit. Normal profit or normal loss means only by selling the goods whatever profit we earned and only by deducting the normal expenses of the business, that is known as normal profit. This is abnormal. So abnormal you have to add back in order to get the normal profit. So abnormal loss, that is loss on sale. How much? 26,000. That you have to add. So 2016 you will add 26,000 because it is an abnormal loss. Are you understanding this adjustment? Why we are adding 26,000 and how this 26,000 came?
Yes, ma'am. Yes, ma'am.
Okay. You
Yes,
just, yeah, you show the proper working how this 26,000 came. I want to see. You write fully entire thing. Okay, fine. Now next. We are moving to 2017. There is no adjustment. So write as it is. And profit. 2017 firm earned profit 1 lakh rupees. Write as it is. What about 2018? There is a loss. You can write it in bracket. 20,000 is a loss. And there is an adjustment. 2018 31st March profit loss is given, and from 1st April 2017 the year starts and ends on 2018 31st March. Now what was that adjustment? See what I said, I explained you in detail. Whenever any asset is purchased, you have to show in balance sheet, but accountant has shown in the debit side of PL account as traveling expenses. Due to this, unnecessarily profit has been reduced. Now you have to add back. How? What you will write? Capital expenditure charged to revenue expenditure. You have to write in this way only. Capital expenditure, because 1 lakh is capital expenditure. Purchasing an asset is always capital expenditure. Charge to revenue expenditure. The accountant is treating this as revenue expenditure. That is why he has shown in the debit side of PL account. So now you have to make it correct. How to correct? Just in order to arrive at the correct profit or normal profit, just you have to add back 1 lakh rupees. Unnecessarily reduced, just add back this 1 lakh rupees. And one more mistake, since it is an asset, so that particular year, that asset was purchased on 1st April 2017, you should charge depreciation for the entire year. Normally, if we are purchasing any asset, we have to charge depreciation. And you have to see the date when the asset was purchased. So, when you do that, what you are seeing? 1 lakh rupees, it is the, this 1 lakh rupees, what is that? 1 lakh rupees is the capital expenditure, purchasing an asset. Now you have to charge depreciation on written down value method. So 20% of 1 lakh, 20,000. And charging depreciation means it will reduce our profit. Whenever depreciation is charged, what is actually happening? Depreciation is a loss for any business. You will show in the debit side of profit and loss account. From profit, you have to subtract. That is the reason from here we are subtracting. You are writing in negative bracket 20,000. Any doubt so far? Yes, are you understanding?
Yes, ma'am.
Okay, fine dear. Now we are coming back to 2019. So 2019, what will happen? Profit or loss given in our question 31st March 2019, 1,50,000, write as it is. But see what I said. I said whenever any asset is purchased by the business, you have to charge depreciation from the date of purchase till the asset exists in the business. So after every year, that is end of every financial year 31st March, you have to charge depreciation. So this asset was purchased on 1st April 2017 as our question tells. So we charged on 31st March 2018 20,000. Did the question said that we sold that asset or it exists no more? No information is given means what? It means still the asset is with the business. So what about the next year 2019? Question will not tell you to charge depreciation. You have to charge again. If the question says asset does not exist, no need to charge. Here no such information is given. Question is silent. It means still the asset is with the business. Now you have to charge depreciation on that. But again, the depreciation method is written down value method. Now written down value method means what? Written down value method means I already taught you. First year, what was the original cost of the asset? 1 lakh. In that 1 lakh, 20% we charge depreciation. Then the next year, that is second year 2019, what was the value of the asset now? 1 lakh minus 20,000, 80,000. Now you will charge depreciation 20% the next year on 80,000. Why? Because the method is written down value method. Written down value method means every year you have to see what is the value of the asset after charging depreciation. On that amount you have to charge depreciation. That is the reason we are charging depreciation on 80,000. Suppose this method was straight line. The question tells you charge 10% depreciation on straight line. What you will do? The first year 2018, if you calculate 10% dep on 1 lakh, you will get 10,000. So 10,000 minus 1 lakh. Next year value of the asset will be 90,000, but depreciation will be 10,000 only. Depreciation will never change in case of straight line method. Same amount of depreciation you have to charge throughout its life. But whenever the question tells you written down value method, every year amount of depreciation will change because the balance of the asset will change. After every year, whenever we charge depreciation, the balance of asset will change. Are you getting my point, dear Pavitra, Swarnika, Sachin? Are you understanding?
Yes, ma'am.
Oh,
Yes, ma'am.
okay, dear. So this is the reason, because we don't know in question what they will ask. They may give you straight line, then this will not work. Okay, fine. Now we will do the adjustment. So 2015, how much actual the normal profit, or you can say correct profit? 40,000 as it is, no change. What about 2016? 60,000 plus 26,000. Why? That abnormal loss on asset you are adding back. 86,000 you will get. What about 2017? 1 lakh rupees. There is no change, right, as it is. 2018, there is a loss. Be alert. 20,000 is a loss, negative figure. Again 20,000 is a loss. How? That depreciation you have to subtract, and 1 lakh, this is the profit unnecessarily we subtracted from the PL account because it is purchase of an asset. So 1 lakh is a positive figure. 20,000, 20,000 you have to subtract. 1 lakh minus 40,000, 60,000 is the correct profit during 2018 31st March. What about 2019? 1 lakh 50,000 profit, but you didn't subtract that depreciation. You means accountant didn't subtract. Why? He treated the capital expenditure as revenue expenditure. Then why he will charge depreciation? But we got to know it's a wrong. So now you have to charge depreciation even if the question doesn't say. Question doesn't tell you to charge depreciation on 2019. That is the twist here. Now you have to understand. Again 2019 you have to charge depreciation on 80,000. 20% you will get 16,000. Now 2019 1 lakh 50,000 minus 16, 1 lakh 34,000. Any doubt anyone is having till here? Pavitra, Swarnika, Sachin?
No, ma'am.
Oh,
No, ma'am.
okay dear, very good. Now these are the working notes. No need to write as it is, no need to copy. My work or my job is to make you clear your concept and everything. Presentation is your part. How much nicely you are presenting, it will definitely help you in getting good marks. So you can write properly each and everything and you can present in your own way. Fine. So now we will come back to our formula. Average profit equals to, first you have to calculate average profit. After calculating you will calculate goodwill. So what is average profit? Average profit equals to first you have to add these profit. These profit means which profit? 40,000 plus 86,000 plus 1 lakh plus 60,000 plus 1 lakh 34,000, which will come 4 lakh 20,000. In this 4 lakh 20,000 you have to divide by 5. You will get 84,000. Now goodwill equals to 84,000 multiplied by 1.5. So the final answer is 1 lakh 26,000. Got it or have any doubt? Yes, anyone is having any doubt?
No, ma'am.
Oh,
No,
okay dear. So this question, then this type of question 100% comes in your boards. All these questions have already come in boards. So you can just have an idea how the board asks the question. This type of adjustment they will give. They will not ask you very simple question, just calculate. No, this type of some twist will be there. That's the reason I am taking the time and making the concept clear. So that any question they ask, you should be able to answer. Once your concepts are clear, you can do it. You can take page number 12, weighted average profit method. This is very easy, this weighted average profit method. If there is any increase or decreasing trend in profit, we will follow weighted average profit method. For example, 40,000, 80,000, 1,20,000. Like for the continuously 2-3 years, we are watching that profit is either increasing or decreasing, like 40, 80, 120. During this time, what we use in order to calculate goodwill? Weighted average profit method we use. So now what is the formula? Goodwill equals to weighted average profit multiplied by number of years purchased. Weighted average profit, you write full form. WAP means weighted average profit. You don't write the short form and all. Equals to sigma. In economics you should know the sigma means sum total of XW. I will tell you what is this XW everything. Just write it down. This is sigma XW divided by sigma W. Now X means profit. It will be given in your question. W means weight. XW means P multiplied by W. Now we will see the question. You will understand. Page number 13, 1-3. Weighted average profit method. Question. Calculate goodwill of a firm on the basis of 2 years purchase of the weighted average profit of the last 5 years weight assigned to each year would be 1, 2, 3, 4, 5 respectively to the profit entered 31st March 2015, 16, 17, 18, 19. 5 years profit given. They are asking you to calculate goodwill on the basis of weighted average profit method. Suppose the weights are not given. You can write it down as an important note. Sometime in question, weight will not be given and they will ask you to calculate goodwill using weighted average method. Very easy, no need to panic or worry. You have to assume weight like 1, 2, 3, 4 till the number of years profit is given. If 5 years profit is given, first year 1, second year 2, third year 3, like that weights you have to assume yourself even if the question doesn't tell you. Understood?
Yes, ma'am.
Yeah. So just write it down, whatever I am saying. You just, as important note, you write everything. Why I am saying when you do the questions, I don't want my students to face any problem. If you maintain the proper notes, all the important things, whatever I am telling you, while doing the questions from D.K. Goyer or T.S. Gerwal, whatever book you are having, it becomes easy. You can just refer those notes and do the sum. That's the reason. Okay, fine. Now year ended, profit is given 31st March 2015, 36,000, 2016, 1,70,000, 2017, 1,90,000, 2018, how much? 2 lakh, 2019, 3,50,000. These are the profits given. Now what is the additional information? An abnormal loss of rupees 50,000 was incurred during 31st March 2015. So 31st March 2016, 36,000 is the profit. During that year, this 50,000, it is the abnormal loss. Whenever the question says abnormal loss means how you will do the adjustment, you have to just add. Where you will add this 50,000, you will add in 2015. Now what is the second adjustment? An abnormal gain of rupees 30,000 was earned during 31st March 2016. 31st March 2016, that is 1,70,000 profit. Abnormal gain was there. You have to subtract this abnormal gain. This is the rule. You have to subtract abnormal gain. You have to add abnormal loss. Third adjustment, repairs to car 40,000 was wrongly debited to vehicle account. Till here first we will understand. Again that capital expenditure, revenue expenditure concept is coming here. See, whenever business purchases car is an asset. You will show purchase of that asset. Where you will show? You have to show in the balance sheet, asset side. Suppose already business is having car and the car is not working and the business is getting it repaired by the mechanic, then it is not capital expenditure. Repair to an asset which already exists in business is a revenue expenditure. Kindly write it down, dear students. All these concepts will really work like miracle for you people. You write it down, whatever I am saying. So what I said, whenever purchase of an asset is given in your question, it is capital expenditure. But they are saying repair to car. Repair to car is a different thing. It is revenue expenditure. Already I am having an asset and my asset is not working properly. In order to make it work, I am getting it repaired. That is revenue, because see, whenever we maintain car at our homes also, it gets repaired frequently. So we go to the mechanic, we get it repaired. It is not capital expenditure. We are not purchasing every time. Whenever you get your car repaired, will you say, yes, I purchased my asset? Every time you will say, I have purchased a car? No, it's a revenue expenditure. So the treatment will also be different. Whenever we are purchasing a car, you will show in the debit side of balance sheet. Whenever you are getting it repaired to the asset already existing in your business, you will show in the debit side of PL account, because revenue expenditure. Till here, anyone is having any doubts? Sachin, Pavitra, Swarnika? Fine, I hope you all are writing everything. Yeah, okay, Sachin. So now they are saying, next line we will read. Repair to car 40,000 was wrongly debited to vehicle account. Debited to vehicle account means they are treating repairs to car as an asset. Purchase of car, the accountant is thinking. If the accountant thinks that it is purchase an asset, he will show it in the balance sheet, okay? He will not show it in the PL account. So he has shown it in the balance sheet debit side. But actually it is not at all capital expenditure, it is revenue. You should show it in the debit side of PL account. There is a mistake. Now on 1st January 2018, depreciation was charged 10% per annum on SLM, straight line method. Now see, very simple concept. When the accountant treats repair to car as a purchase of car, definitely he is thinking it is a capital expenditure. Now he is showing this, what is the amount? 40,000 in the debit side of this. Not debit side, balance sheet asset side, he will show like car and he will show 40,000, which is wrong. If he is thinking in that way, definitely he will charge depreciation on that amount. So that is what happening. Both the things are wrong. First of all, it is not an asset. That is the wrong. He is treating it as an asset, which is wrong. Balance sheet, unnecessarily the asset has increased. It is not the asset. Second, what he did, he charged depreciation. When it is a revenue expenditure, how you will charge depreciation? Unnecessarily in PL account, if you see, the profit has reduced. When you charge depreciation, it is an expense. So any unnecessary expense, what it will happen? It will reduce profit of the business. I hope the concept is getting cleared. Yes?
Yes, ma'am.
Yes, ma'am.
Okay. Okay. Now how to do this I will teach you. We will move to next adjustment first. That is D. Closing stock as on 31st March 2018 was undervalued by rupees 50,000. All these are extremely important questions. See, closing stock. What is the meaning of closing stock? Now, where the closing stock comes, you have to think in this way. See, closing stock we calculate at the end of the financial year, that is 31st March. And we show in the asset side that closing stock is always shown in the asset side. And what about our PL account? That is the trading. First in class 11th you all must have studied trading, PL, then balance sheet. In trading account, this closing stock is shown in the credit side of trading account. So the accountant has undervalued means he showed 50,000 less. Now think what will be the impact. Trading account, if you show anything in the credit side, like you show sales, whatever you show in the credit side, it increases profit, because trading PL means whatever you are showing in the debit side, they are treated as expenses. Whatever you are showing in the credit side, they are treated as income. So closing stock is shown in the credit side of trading account means we are treating it as an income. Now by 50,000 the income is less. So in PL account you have shown 50,000 less. That is the first mistake. So you have to add back. Profit will be reduced by 50,000 when you are undervaluing. Now what will be the second impact? See, closing stock becomes opening stock for the next year. Try to understand the concept and write it down. These are the 11th standard concept. So whatever closing stock we show in the assets or in the trading account, wherever you show the closing stock, that becomes the opening stock for the next year, that is 1st April of the next year. Very easy. Suppose I am running a mobile phone shop. I am closing my books of accounts on this 31st March. 31st March I am having stock of mobile phone 10,000. Will I put it in the dustbin? That is my closing stock, assets for me. But next year, when that is next year means next day itself, 1st April, the next day, beginning of my new financial year, I will show it as my opening stock. Now I am starting business with these 10,000 and I will purchase more during the year. Are you understanding what is opening, closing stock, all these concepts? Yeah. Now what is happening? Just imagine everything. Think yourself as a businessman or woman. You will understand everything nicely. Now what is happening when you are moving to the next year? Already you did one mistake, that closing stock you showed less. So your profit reduced the last year. Again, due to that, the next year, this opening stock you will show in the, where you will show debit side of the PL account. You remember PL account debit side we always show in the, not PL, like trading account debit side. In class 11 we show 2 opening stock, then 2 purchases, less purchase return, then 2 wages, 2 carriage inward. In the credit side we show by sales, by closing stock. This is the format of trading account, class 11. So if you see, opening stock we show in the debit side of trading account means it is shown as an expense. When you didn't show the closing stock, what is the meaning of this? It means you didn't show the opening stock also. Opening stock is also undervalued by 50,000. You have shown opening stock less the next year by 50,000. What will be the impact? When you are showing any expense less, profit will increase. Automatically by 50,000 the next year profit would have increased. Now the next year you have to subtract that. Are you understanding, dear?
Yes, ma'am.
Okay. Okay, dear. Pavitra, are you understanding?
Yes, ma'am.
Yeah, fine. After all these you have understood, we will do the question now. So first, goodwill equals to, what is the formula? Weighted average profit multiplied by 2. 2 means that is the number of years purchase given in our question. Weighted average profit, what is the formula? Sigma XW by sigma W. And we will see how we all are getting all these. Weighted average profit equals to 2,33,066. Profits equal to X. You have to write in this way, dear. Write everything. The abbreviation also you have to write what means what. So profits equal to X. What you are assuming? What is this X? You have to write. Weights equal to W. Now profit are given 36,000, 1,70,000, 1,90,000, 2,00,000, 3,50,000. Weights 1, 2, 3, 4, 5. As I told you, even if weights not given, you have to assume. Even if the question is silent and they are asking you to calculate goodwill through this method, don't panic. Weights not given, you have to assume 1, 2, like the number of years profit given, you have to assume yourself. Now XW, as per the formula, X is profit, W is weight. 36,000 into 1, 36,000. 1,70,000 into 2, 3,40,000. 1,90,000 into 3, 5,70,000. 2 lakh into 4, 8 lakh. 3,50,000 into 5, 17,50,000. As per the formula only we are doing. Now XW, sigma XW means sum total of this XW. How to do the sum total? 36,000 plus 3,40,000 plus 5,70,000 plus 8 lakh plus 17,50,000. You can just do all these calculations in your rough and you can check whether it's coming or not. You will get 34,96,000 when you do the sum total. What about the weights? Sigma W means sum total of weight. 1 plus 2 plus 3 plus 4 plus 5. This is the meaning of sigma W. Sigma means sum total of this weight. It comes 15. Goodwill equal to, put the formula, WAP into 2. Weighted average profit multiplied by 2. So now what is this weighted average profit? Weighted average profit 2,33,066. How we got weighted average profit? You have to put the formula. Sigma XW is 34,96,000 divided by sigma W 15. When you solve, you will get this. So now just do the simple multiplication. You will get the answer 4,66,132. Now without adjustment, goodwill is rupees 4,66,132. Without adjustment means these first you have to do these adjustment. Without adjustment only we got this 4,66,132. Suppose this additional informations are not given in your question, only these profit are given, this is the way. But in our question additional information is also given, that is with adjustment. Then you have to write the profit only after making the adjustment. Now we are going to see. Okay, that's all for today, dear. Actually next class I will teach again. It's a lengthy thing, okay, and it will take some time to make you understand. So I think we can continue our class after today's Wednesday. So Friday shall we continue this question? Is it okay for you?
Yes, ma'am.
Yeah.
Yes, ma'am.
Okay. Thank you, dear.
Thank you, ma'am.
Yeah, thank you.
Thank you, ma'am.
Thank you, dear.
Bye.
Bye. Good night. Thank you.
Bye, ma'am.
Yeah, good night, dear.